Hey everyone, happy Thursday, September 21st. It's about 10:55 on the West Coast and time for another market updates. It's pretty cloudy in Central Oregon today, and it's pretty cloudy in the markets, all thanks to our friends at the Federal Reserve, who concluded their two-day meeting yesterday. And they did pause as was expected, but everything else that came out of the meeting was not what we wanted to hear. Very rosy outlook on the economy the rest of the year and going forward. Things like, GDP higher, unemployment lower, inflation higher, but core a little bit lower, which was good. But the main two things that we didn't want to hear and we didn't want to see is, according to what came out, is a majority of their members support another hike this year. So they only have two meetings left, one in November and one in December. And so they're saying they're going to hike again this year, which we did not want to see. We want to see a pause and then cuts. Speaking of cuts, previously in June, they were forecasting about four rate cuts, which we want to see in 2024. That has dropped to two with the majority of the members. So again, not what we want to see. So the markets did not like seeing that, did not react well. And one other thing I wanted to point out is, Chairman Powell was asked, how the Fed will know it's done too much, it's raised rates for too long and so forth. And his, basically his response was, you're overly restrictive when you see it. So basically he's saying, we know we'll hit the wall, we know when we'll drive over the cliff when we do it. Doesn't seem like the best way to do things, seems very short-sighted. So we'll see how things go. But markets did not like that, did not like seeing that there's going to be more hikes this year and less cuts next year. Next thing we got was August PPI. So August PPI numbers came in a little bit higher than expected, but still the year-over-year number is only at 1.6%, so under 2%, which is a really low number. Oh, go back here. But core, as you can see, the core is the dark blue. That still dropped. So PPI, just like CPI a couple weeks ago, as you remember, energy prices, gas prices was a big part of the jump in the headline. That's taken out of the core, and that's why core in the CPI and in the PPI continue to drop, and that's what we want to see. Next thing we got was August starts and permits. And we know this is really important because this is our future housing. The houses that get starts, the permits that get pulled, this is the housing that's going to be available in the next couple of years. So starts were down across the board. Completions were up, but down in single family. And then permits were up across the board. So, the main thing to keep in mind, current household formation is at, a little over 2 million. So that's the demand. That's people moving out, buying a house, renting an apartment, whatever it may be. And let's even look at the most rosy number here, the permits. The first thing that happens, that's at 1.4 million. So we're still 500,000 behind. So regardless of what happens, we're lagging behind. And again, market dependent, but we're lagging behind across this country inventory to meet all the demand. So that's going to be very price supportive. So it doesn't seem like, at least across the country, we'll see big price drops anytime soon, unless we get a huge drop in demand. Next thing we got was August existing home sales, and that actually came out today. And this is really important for our industry because it's closings on existing homes. So again, down 15.3% year over year now. But as you can see in the inventory is at 1.1 million, which is down 14% year over year. So they match up pretty close. The sales compared to the down inventory, more inventory, we probably have more sales. With all of that going on, the median home price, again, going back to what we just talked about a second ago, more demand than, with less inventory out there, that's going to be price supportive. So that's gone up to 407,000 across the country. And then the other things to look at, 3.3 month supply. If we take this 1.1 million at its full amount, and keep in mind that is including pending stuff. So I think it's only about 580,000 available. That's not in contract. And then 3.3 month supply, that's normal market is about 4.6. So even at this big number, we're still well below a normal market. And I think we're about half the inventory that we had at this same time in 2019. So very low inventory amounts. Still, if you look, though, if you price it right, only 20 days on market, 72% sold in less than 30 days. Not much change in the demographics here. So existing home sales are really being hurt by rates, obviously, and really being hurt by, not a lot of inventory out there. Initial job claims. So this is the first thing we got here today after, all this Fed stuff. They were expected to be about 225,000, came in at 201,000. So employers are keeping their employees. This, though, is not good for us because the Fed has made it very clear that they're paying really close attention to the job market. That's a lot of their figures, a lot of their economy, their optimism on the economy has to do with the job market being so strong. We know that there's some weirdness with those numbers, but they're looking at this stuff. They're saying, look, it came in even lower. So not what we wanted to see. The markets did not want to see that either. So where does that leave us? The average conventional today jumped from 7.25 to 7.47. So a little bit below the high of the year, which was 7.49 a couple weeks ago. So we're pushing it. That this did not go well. This is not where we wanted to see. And so rates are, kind of hanging out in these 7 to 7.5 here for at least, a month or two now. So elevated rates for longer. Going back, I think the lowest this year now is 5.99. Important dates. So we got the Fed coming up November 1st, as we were talking about. What are they going to do then? That's the big question. Before then, though, we got 2 inflation reports, and this BLS, on October 6th, that's a big report. Inflation's coming down. They don't seem very concerned about inflation right now as much. The BLS stuff, though, is where the job stuff is where they're really paying close attention. So, here in a couple weeks, that's going to be a big indication what they might end up doing here in November. If we're going to get any sort of reprieve, get them not to raise this year, it's going to be these BLS job reports, changing. Besides that, the one thing I want to talk about, there was a couple of interesting figures that came out. One was 71% of prospective home buyers said that they will not buy a house, they don't want to do a loan until the rate drops below 5.5%, which is interesting. That's the magic number. And then the other one, another NAR survey came out today, was with prospective home buyers saying that, let's see, 39% said they're waiting for rates to drop. That's why they're not buying. And then 26% said, they're not buying because of multiple offers. That's the main reason. So again, looking at these things, if everybody's waiting for rates to drop, 71% want 5.5, just normal economic stuff. If everybody's waiting, that means all of a sudden a bunch of people are looking to buy when we do get to that point, when the Fed does start cutting in 2024. So that means all these more, prospective home buyers in the market at the same time. So you as a, potential home buyer, or you as a realtor trying to, talk to your clients about it, what they say is about every 1% drop is another million prospective home buyers, people looking to buy. So that's going to raise competition. That's going to raise prices. So even with rates lower, you might not be able to get the house you want because there's 15 other offers. And if you do get it, you're paying over what you would pay right now. So, the savings in rates, by the rates going down to 5.5, you might pay $75,000, $100,000 more for the house at that point. So you got to keep all that stuff in mind. And I know these rates being high is not what anybody wants, especially me, but there is some opportunities out there, and you just got to kind of look outside the box. So if you have any questions about this, or you want to reach out, feel free to do so. I'd be more than happy to help. Have a great day, everybody.